India just took the first formal step toward a massive free trade deal with the Gulf countries, and almost nobody realizes how big this actually is. This single trade bloc already does more business with India than Japan, South Korea, or even Germany. And if this deal works out, it could quietly become one of India's most strategically important economic partnerships. On February 5, India and the Gulf Cooperation Council, the GCC, signed the terms of reference to officially begin negotiations for a free trade agreement. This is not the final deal. This is the formal launch of talks, covering tariffs, services, investments, digital trade, labor mobility, and energy cooperation. The GCC includes Saudi Arabia, the UAE, Qatar, Kuwait, Oman, and Bahrain. Together, the GCC's combined GDP is around $2.1 trillion. To understand how big that is, that's larger than Canada, larger than Italy, larger than Brazil, and just slightly smaller than France. Only about 8 countries in the world have an economy bigger than the GCC bloc. India's total trade with the GCC is about $180 billion per year. That makes the GCC India's largest regional trading partner. Larger than India's trade with Japan, South Korea, or any single ASEAN country. In fact, roughly 15% of India's total global trade already comes from just these 6 Gulf countries. In optimistic scenarios, a comprehensive FTA could push India GCC trade to around $300 to $350 billion within the next 5 to 7 years. That's an additional $120 to $170 billion of trade every year. To put that in perspective, an extra $150 billion is roughly equal to the entire GDP of countries like Morocco or Hungary. So this single agreement could eventually add an economy-sized boost to India's trade flows. Key chapters India will negotiate include 1. Tariff reductions, engineering goods, electronics, textiles, pharmaceuticals, chemicals, jewelry. 2. Services access, IT and digital services, fintech, healthcare, education, construction. 3. Investment protection, Indian infrastructure projects in the Gulf, Gulf sovereign wealth funds investing in India. 4. Digital trade, cross-border data flows, digital payments, e-commerce rules. 5. Labor mobility, easier visas for Indian professionals, mutual recognition of qualifications. Now the most important question, will oil and gas become cheaper for India? Short answer, right finger not directly through tariffs. That's because crude oil already faces near zero import duties globally. But the FTA still helps India in 3 indirect ways. First, long-term supply contracts. More stable pricing and reduced volatility. Second, investment access. Indian companies like ONGC and IOC can invest directly in Gulf energy assets. Third, LNG pricing flexibility. Better negotiating power in long-term gas contracts. So the deal won't suddenly cut petrol prices, but it significantly improves India's energy security and bargaining power. Which, strategically, matters even more. The Gulf countries also have strong incentives to push this deal. India is the fastest growing major economy, expected to become the world's 3rd largest economy by around 2030. Home to a massive and young consumer market, more than 9 million Indians already live and work in the Gulf, forming one of the largest economic bridges between the 2 regions. For the GCC, this FTA is fundamentally about diversifying away from oil and building long-term growth partnerships. If concluded well, this deal could reshape India's position in global trade. It would reduce India's dependence on Chinese supply chains, lock in long-term energy partnerships, strengthen India's role as the main economic link between Asia and the Middle East. At the same time, India will also face pressure to open parts of its own market, especially in sectors like petrochemicals, metals, and logistics. So this is not just another trade agreement. This is a $2 trillion economic bloc, a potential $350 billion trade corridor, and one of the most strategically important FTAs India has ever attempted. If negotiated carefully, this single deal could shape India's trade map for the next 2 decades.